Welcome everybody. Thank you so much for joining our live stream today. A little bit ago we had a great one walking through the AOA forms, and last week or the week before we had one on how to recover your rent through small claims court. Lots of great stuff going on. And so you can catch these live streams, you can sign up for the events, and just encourage you to do that. Also want to encourage you to subscribe to this YouTube channel and then toggle that notification bell. That way you'll get notified when we go live, and then you'll be able to jump on and ask questions and get a whole lot out of it. My name's Jeff Fowler. I'm the president of the Apartment Owners Association, and it's just so good to have you with us. Thank you, AOA members. Thank you. You guys are amazing people, housing providers, solving the problem of the housing shortage here. So I want to thank you. It's amazing how the government thinks that we're the problem when really they're the ones that are creating the scarcity, huh? Anyway, thank you. And be sure you're reading the AOA magazine, and please act, respond, come get in the ring with us, and we'll fight together, and we'll let the city council members and mayors and the other local authorities know what is happening and how they're impacting us with the laws that they're making for the rental housing industry. Anyway, AOA, really what we want to do is give you ideas to help you make and or keep more money, or opportunities. And this is one of those where we have a special program with GS Insurance. And because it's a group insurance plan, it's a great rate. And this is a company that wins awards, and it's high volume in this industry. So they are specialists. Our speaker today is a specialist, and he's anyway, so before I start to introduce him, I might as well, right? So he's a graduate of Notre Dame, and he's been in this industry for over 20 years and really longer than that. So he's received awards, and he is really a specialist, and he's put together programs specifically for us. And the insurance is for apartment owners, but it can cover lots of different areas. It's not just apartment insurance. There's a lot of different areas that he can help get you the best deal on. And he is a landlord himself, and basically his deal is to give you the best claims experience and the best price. And so there's a lot of companies out there, they'll quote you a great price, but when things happen, guess who's not there for you? But that's not this company. They are there for you, and they'll give you a great claims experience. So it's my pleasure to introduce to you today Anthony Miller.
Afternoon, indeed. My name is Anthony Miller, and I am the CEO and founder of GS Insurance Solutions. Essentially, we are the arm for the Apartment Owners Association, their insurance program. Today, I'm going to be talking to you about the most exciting topic ever, which is insurance. And I'll try to make it as exciting as possible. Entitled How to Save with the AOA insurance, with the group insurance program. And not just to save financially, obviously that's the end goal, but really to save on every level, from a risk management standpoint, from really looking at each and every one of your portfolios from a risk management standpoint, intelligently, to be able to maximize not only from a coverage standpoint, but as well from a cost standpoint long term. And we'll try to do this. I have 20 minutes, so we'll try to do this high level, and hopefully we'll be able to speak to a number of you in person about your specific needs and your specific insurance risk exposures. But just a little background on us. This is something that we specialize in. It's something that we've done for a long time. My background has been in real estate. I'm a landlord, and so through my relationship and our partnership with the Apartment Owners Association of California, it was really important to them that they had a partner that knew exactly, that was a specialist. And so through a vetting process, they essentially chose us as their exclusive endorsed broker to make sure that we provide the best solutions for each and every one of you as their members. And we've done that quite a bit. We've grown. And so I want to just first start and just to thank you for the support for every member, every partner client of ours, because the more that we grow, the more that we can partner, the more additional services that we can offer at a much more competitive rate. On a number of different levels. And so with that being said, I just thought it'd be helpful to sort of highlight overall some of our team members. Our team is growing. Some of you may know some of these folks or have spoken to them, but I just thought, we'd put some pictures to the name. Brett Davis, he's one of the business development account executives. He's sort of in the front lines. Robbie Hess, he's a vice president, been with us, and has handled a number of different multi-international properties locally and internationally. A big sort of conviction of ours is to make sure that we're responsive and sort of aligned with the AOA, is to make sure that each and every one member feels like we care. And Elizabeth Dahlke in our personal lines division, her retention speaks for itself. She does that. So we've hand selected our team to really make sure that each and every member has their needs met. And so and a few others, Josh Weger, Bernie, Ellie, Susie, again, just a team that really we've created, handpicked to really make sure that we can meet each and every need that each of our partner clients have, and ultimately members we can meet. Just a high level overview. What we're going to go over today. Secrets for every apartment owner that they should know while insurance rates continue to rise by double-digit percentages. Have you seen your insurance rates increase across the board, whether by property and casualty, your general liability, your umbrella rates, workers' compensation, professional lines, you name it? Most rates right now in the state of California, they've risen significantly, and we're going to go over that and what secrets you can take in order to essentially save. What things you can do to set up to anticipate and make sure that you're prepared for these types of things. Second, how do we know if your property's covered? Most of our clients, before they come to us, they sort of passively are renewing their insurance. They have a relationship with their broker, and as we sort of dig in and look at their policy forms, there's a lot of things that generally aren't covered, or that they don't know that aren't covered. And as you may or may not know, a lot of these policy forms are becoming more complex, and really it takes someone who's a specialist, in some cases an attorney, to make sure that you see the differences in these policy forms and the wording and the exclusions, and so not every policy is the same. And then lastly, what are the 5 proven steps every apartment owner could and should take when structuring their insurance portfolio? So that's sort of high level, trying to make it as exciting as possible, trying to hit on a number of levels that you can take away and make this as beneficial to the time we have now, but to your portfolio ultimately long term. Insurance rates are on the rise. So let's take a look back. If you just look back the last sort of 3 years, everybody knows, right? We've had massive fires, 3 of which were the U.S. top 10 costliest fires, and they were in California last year. 5 of the top 10 fires in California occurred last year. 5 of them, right? 50% of them. There's been a lot of damage. There's been a lot of folks that have died, unfortunately, from them. 40,000 structures, 40 billion in insured losses, right? According to National Fire Protection, and 2 billion a year on average. I think that's gone up. Are spent from the U.S. on fire suppression, but unfortunately, the fires just continue to go up 160% year after year. And so I think a lot of that has to do with the droughts. Right now, we're in June, and 75% of the Western U.S. is already experiencing heavy droughts. AccuWeather meteorologist Dave Samuel, he predicted that there'd be about 9.5 million acres of land that would burn this year across the western U.S. And half of that would actually be in California. So if we take all these things into account, right, we look at all this information, we look at all these things that are happening right now, it sort of makes sense. It doesn't necessarily make us feel any better, but it makes sense. Why? Because these are insurance companies are private companies, and so they're looking to be profitable. And so what does that mean for an apartment owner? What does that mean for you as the landlord? Well, increase rates are going to increase one way or another. They're going to increase to make sure that their loss ratios are profitable. And what we've seen with those rates is that, globally, there's been about an 18% increase in commercial rates in the first quarter, which is a lot. I mean, that's pretty high, and that's actually down from 22% rate increase in the fourth quarter of 2020 and 20% in the third quarter. So you see these rates are trending up, and they're continuing to go up. Commercial property rates, just as a high-level statistic, 8.6% on average. California, I believe it's a little bit higher, but they're continuing to rise. Umbrella rates have gone up by 14% in the first quarter. And based on the Global Insurance Market Index and National Alliance, we're seeing that these trends are going to continue to increase because, unfortunately, the fire situation and a number of other sort of catastrophic exposures are not we're not trending down, we're trending up, right? It means that there's going to be tighter and stricter underwriting. If some carriers are just not going to write what they would write 5 years ago, whether it's the age of the building, whether it's the demographic of the building, the location of the building, a number of different criteria are going into whether or not these carriers, and if they do, they're going to price it accordingly. The inspections, if you have a claim, we're seeing that the inspections and the claims handlings are much stricter. So you'll see random inspections from the carriers that will come out and will look at a number of different things, whether it's electrical, whether it's plumbing, whether it's a litany of different things, railings on stairs, you name it, because the carriers are really looking for those attractive properties, those insurable risks, where essentially they don't have to take on as much risk. They want clean risks, and that's just candid, the most candid way. So, and we're seeing carriers either are changing their appetites entirely, not insuring landlords, not insuring apartments, or they're leaving the state and trying to diversify in other ways. So what's the solution ultimately, right? What can we do? What can apartment owners do? Is it passively renewing? Is it staying with the guy that you spend so much time with or have a relationship with, year after year? No. If you really want to be proactive, ultimately the solution, to sort of high level summarize, is to make your risk as attractive as possible, right? Making it as attractive as possible. And there's a number of ways to do that. And really having a partner, having an advocate, an insurance specialist to do that, I think ultimately is the key. But it starts with the demographic of the building, right? Little things. And some of these things, not every apartment owner or landlord will be able to do, but fire sprinkler systems, central station alarms, stovetop fire stops. I don't know if anyone knows what those are, but they're sort of little canisters that go above, these the kitchen stoves, and when it gets hot, they pop, and they're extremely effective in putting out fires. There are a number of carriers that will automatically give 10, 15, potentially even more percentage if you have these sort of things in place to prevent fires, to be proactive. And it really just speaks to the management of the apartment owner, right? If they know that there's that care, it's going to reflect well, right? Obviously, claims history, right? When you looking, but not just the claims history, looking at reserves. Are those reserves set accurately if you do have claims? Is someone looking at those? Are they being proactive on those? Open claims can be, detrimental. If you have an open claim and you're going through a renewal process, more than likely your carrier is possibly going to renew you. There's a good chance, but no other carrier, at least standard carriers, will want to really see that as an attractive risk, even if it's um, you have a great portfolio. And so it's really important to make sure that we're taking a look at those and being proactive with those. The property management, it matters. The maintenance on these properties. Nowadays, you can pretty much see even inside your properties. So when an underwriter is looking at your properties, is there graffiti? Is there the walkways? Are they clear? Are railings, up to code? Is there debris? Is there garbage? These sort of things. Just looking at the quality of the actual buildings, these things actually matter. Believe it or not, payment history matters with a carrier. They keep track of these, and they assess the actual owner. That matters. Property updates. It really does matter. There's certain carriers that don't mind about the actual carrier, the building age of the building, but they do care about the updates. Has the electrical, plumbing, heating, these sort of things been up to date? It matters which carrier you're with, especially when you're making a change. Are you with a non-standard carrier, one of these sort of surplus lines, non-admitted carriers that are not domiciled in the state of California? Or are you with a standard carrier, like a Travelers, like a Nationwide, or a sub-tier carrier? And I won't name any sub-tier carriers in case they're listening, but there are some sub sort of tier, what we consider. Obviously, they're still in that threshold of being an A- rated carrier, but there's some that don't sort of have some of the same standards as some of the other carriers. But and again, your broker matters. It really does. Obviously, I'm biased because I'm one of them, but as a landlord, it matters. It matters who you're with, because ultimately it's their relationships with these carriers. Do they specialize in your risk? Are they saying it? Most brokers out there, a lot of them will say that. I'm a specialist. We have 5 clients that are just like you, that are your size. That's not a specialist. Someone who's developed programs, who have exclusive programs, who have these sort of, developed access points and additional coverages that they can advise and properly just make sure, regardless of whether or not you as the apartment owner want the coverage, but to make sure that we essentially eliminate all surprises. The solution also is having a risk analysis done, a complete risk analysis of your coverages, of your policy forms, of your coverage limits, looking at all of these things. And I can pretty much guarantee you 9 out of 10 times, there's so many areas to improve without increasing cost, to save on costs, and to enhance your policy forms 9 out of 10 times. With rates going up, we've seen in our first quarter, I was just talking to a client, they saw double-digit increases, and this was before they actually came on as a client, and we were able to save them double-digit decreases. Now, mind you, they were paying hundreds of thousands in premium, and we were saving them over 100,000 in premium, but their previous broker wasn't, and they exhausted the marketplace. They said they went everywhere, but they weren't able to. And so, the proof is in the pudding. It's something that it's really important to make sure that you have a specialist. These are some basic solutions. Obviously, there's so much more to it than this, but it really does help making your risk attractive. Question: are you covered? Are you properly covered? Do you know that you're covered? Like I said earlier, not all policy forms are the same. Coverage is different from one policy form to another, from one carrier to another. And there's exclusions that are embedded into these policy forms that I think a lot of you will be surprised to know. A lot of times we have insureds come to us and they think, oh, well, I was insured for this, and they find out that not really. Building ordinance coverage is a common coverage that's overlooked. Making sure that there's so many codes in every county that are continually being updated, and if there's a fire or if there's some sort of catastrophic loss, do you have the proper coverage? Because when that loss does happen, the city, the counties are going to enforce these ordinances, and it's important to make sure that you have the proper separate coverage, like building ordinance. Blanketing limits. I think the statistic last I looked was about 83 to 89% of all landlords and apartment owners are underinsured. That means that the limits that you currently have are actually underinsured. So if you do have a catastrophic loss, especially given that the cost of the replacement costs and reconstruction costs, construction costs have gone skyrocket, right, since the pandemic. And so there's really creative ways to be able to structure your policy forms without increasing your limits, which is by blanketing your limits, right? Having a shared pool of limits across a number of different policies, especially if you have a larger portfolio. These are just a few of the things, to look at. Is your policy form on replacement costs or on actual cash value? Some forms will be portion of the building will be covered on replacement cost, which is essentially, to replace it at the full cost of what it costs to replace. And technically what you want is not replacement costs, but reconstruction costs, which includes architecture fees, a number of these different things. But some are on actual cash value, which essentially is replacement costs of minus any depreciation, which is a lot less. There's co-insurance clauses, which, for those who don't know what co-insurance, essentially it means that if you have a co-insurance clause and your values are not placed at the accurate amount, there's going to be a penalty. We can get into more details and more explanation on the co-insurance. It's not as simple as that, but these are things that really need to be looked at. And then on the policy forms, there's so many little exclusions and more that are coming up. Habitational exclusions. If you've ever had a habitational exclusion, that a complaint, more than likely your carrier would like to exclude habitational exposures. Bed bugs, right? There's exclusions there. Tenant discriminations. There's a lot of talk right now with evictions and these sort of things that are happening. Cause of actions for evictions. These are leading to tenant discrimination claims. And your general typical policies exclude tenant discrimination. So that means wrongful eviction, slander, libel, anything like that. Appurtenant structures. If you have structures on the policies, those are generally not included. And then business income, extra expense, these sort of things. If you lost rents, are you properly covered? If there was a fire, normally it's not going to take 12 months to reconstruct those properties. And so really looking at that, some of these policy forms that we have access to are extended replacement costs on top of that 12 months. Sometimes you can get up to 24 months. There's a number of different ways to structure it, but just to make sure that these things are, you're being proactive and that you're just aware, right? Vacancy clauses is something that's sort of come up new because a lot of our properties are seeing vacancies. Well, with these vacancy clauses, up to 30 to 60 days, there's exclusions and things like that easily can allow a carrier to pay less and or completely exclude claims. Again, covering a lot here and really high level things. So, I can speak about this stuff for hours, but wanted to kind of just give you a tidbit just to make it as powerful as possible, because we'd love to speak to you in person. We'd love to go through your individual risks, but 5 proven steps for every apartment owner that they should really sort of consider, and things that you can do and you can walk away from. One is, obviously I mentioned it, having a complete risk analysis done. And it doesn't matter when your renewal dates are. It may have just happened. Actually, sometimes if you've just had your renewal done, those are the best times, because we can look and see what's actually been done in this market to be able to identify, has it been done properly? Has it been done to the best of what the market is offering? And have a specialist do it. Again, I can't emphasize that enough. Number 2, have a review done on your safety and claims prevention policy. And does your broker offer a safety and claims assistance? Are they doing these things? Are there additional services? Us as the partner for the Apartment Owners Association, we have a plethora of different services that are complementary to you as members, as clients, that another broker would charge tens of twenties of thousands of dollars annually, but we offer those as a general, as a sort of a complementary cost to our clients, to make sure that you guys have a safe claims environment. Number 3, your claims review. Having a claims review and making sure that you're looking at making sure claims are reported in a timely manner. Those reserves are set accurately, because sometimes carriers inflate those reserves, right? Which makes it much more difficult to change carriers. Number 4, making sure that an insurance advisor specializes in apartment. Question you can ask is how many clients do they have that are just like you, and for how long? And lastly, like I said, be sure to speak to one of our specialists. There's, it really matters when you have someone that, just like you would choose your attorney, just like you choose your CPA, you want someone who specializes, and you want someone who you trust. And so, again, it covered a lot high level. And there's a lot more to go over, but for today, for the time's sake that we have today, there's things that you can do as an apartment owner to save, and we're here to do that. So thank you so much for your time. You can reach us. Here's my phone number, our main line to the AOA division in our department, 650-282-3104 extension 1, and then you can email us, aoa@gsisol.com. Or click on our website, look around, but we'd love to hear from you. Thank you so much. Until next time.
Great. Anthony, thank you so much for sharing with us. And we have some questions here that we're going to take. And I just want to mention again, you can, if you're watching on AOAUSA.com, there's a blue help button at the bottom. You can type your question in there. And of course, in YouTube and on Facebook, you can type your questions in, and we see questions from those places already. So thank you for the questions, and that'll make this fun here. And before we get started, Anthony, you're aware that we have property management software. And what we're going to do right now is we're going to have a drawing, basically. So everybody that registered for this event, and we're going to put them on a little prize wheel, and hopefully the guys are getting that up here. And what we'll do is we'll spin the prize wheel, and we'll see who the winner is. So it's called AOA Digital. It's a specific brand for AOA members, and it has a connection with the AOA tenant screening, and it also has a connection. It has the AOA forms in there. We're adding more and more forms to that all the time. And so it allows people to digitize everything, and especially that rental application, they can even adjust it and make it totally customize it. So that's kind of cool. And yeah, it has tenant portal and online rental payments and work orders and all kinds of stuff. So, hey, maybe even you want it, Anthony.
Absolutely.
And
I think our family actually does have it, believe it or not.
Oh, cool. And anyway, so guys, if we have that wheel, if we don't have, there it is. So we're going to click that thing, and we'll see who wins. Who is it? Michael O'Brien. All right, you're the winner. So give me a call. Call AOA or email me at jeff@aoausa.com. Go ahead. If you sign up, I'll make sure that you get credited for a whole year. We're going to give you a year for free, Michael. So hope you enjoy that. We'll help get you set up. We have some videos for you that you can watch that helps you get set up. If you're a big owner, we have an upload function to get stuff up there quicker. And anyway, we're here to help you with that. So
awesome.
Now that everybody's got their questions in, we can get started. All right, Doris, on YouTube, what we found out in this pandemic is that that loss of income due to virus was not covered. So in the future, will that change, or is that going to stay the same?
Wow, I got to call Doris. That was a fantastic question, and we've been fielding a lot. I actually wrote an article on this. There's a number of different things that are happening right now and will continue to happen legislatively in every state, across the country, federally. But the short answer is possibly. Generally the consensus with property is that, this essentially, these policies are for physical damage, right? And because there was no sort of physical damage, and that's what they were ultimately designed for when they were set up, when they were originally designed, when they were originally manuscripted, these policy forms, and they didn't account for, nor did they price for, a pandemic. This is unprecedented, right? And so I think there needs to be sort of a analyzation of what exactly they're going to be offering. Some carriers currently are starting to do that. Actually, there's a few that have done it. Some nonprofits that we represent. There's some forms that they've done sort of a sub-limit, nowhere near the limits that your traditional policy covers, but they're headed in that direction. There's a ton of pressure, as you guys probably have read or have heard about. But we're staying on the forefront of this, and we will absolutely make you guys aware of if there is. Now, there was a policy for tenant losses, and the policy form before the pandemic, it was actually silent with the word pandemic. So if you had this coverage, which was essentially a rent protect program, so it covered you if you had a tenant who just left and didn't pay their rents. Now it has to be those covered perils. It wasn't necessarily because, hey, they're still there and they're not paying. They actually left. There actually was coverage on that particular policy form. They have since then realized what they had silent on their policy form and corrected that. And nor would they, go retroactively to cover something like this. So, but there's a lot there, right? There's a lot on the general liability policy form as it relates to if someone contracts the disease and passes it on, and you get sued because someone said, hey, you know what, there were some kids outside and they were spitting on a railing and they had COVID and I caught it, or it was from a neighbor and the common area wasn't clean. There's a ton there. And every policy form is different, but generally speaking, as it relates to your question, I would say we're headed there. There's a lot of pressure. There's a lot of talk. There's a lot of activity, and we'll continue to update you as we get updates. But today, unfortunately, there's no set policy to cover. And if there was, it would be very expensive. And I think I imagine there'll be some sort of federal policy. That's really what we're sort of advocating. A lot of insurance associations is that, much like terrorism, that it's a required policy, that they offer something similar to offer for this, for the pandemic.
What a great question.
Really good question. And there's so much on this. I mean, I could speak for hours on this, and I've been in so many seminars and have talked to so many attorneys on this, and it keeps changing, and carrier stances change and judges' stances change. It's a great question.
Well, we'll have to have you talk a bunch more at the $1 Million Trade Show in April coming up here.
Looking forward to it.
I need glasses, guys. I read Michael O'Brien, and that was Michelle. I am so sorry, Michelle. Hope you're still watching here. But anyways, please forgive me. I really do need glasses. All right, next question. All right, we have Melody. Do you offer tenant insurance? And what should we require in a tenant policy?
Great question. Every apartment owner is different. They handle it different. But yes, absolutely. There are policies out there that programs where you can, Jeff and I were just talking about this right before. We actually did have a program that was essentially set for the apartment owner or the property manager, embedded on their website. And so for every single one of your tenants that come in with, they essentially would purchase a renter's policy, and it wasn't significant, but I think they gave the option 25, 50, and 100,000 of contents, and it is hugely beneficial. Whenever there's a claim, a lot of times what ends up happening is the tenant doesn't have coverage. They don't have renter's insurance. And so what's that magic number? I think it depends. It depends, I think, on the tenant. Obviously, if it was an attorney saying this, more than likely just hearing a lot of them say it, they're going to say as high as you can. I think any is good. If you get the lowest amount, but just because it's going to cover their contents, and if there's a fire, if there's some sort of loss, and they don't have anything, they've lost all their possessions, they don't have any sort of anything to cover them for even temporary living. So even 25,000, I think, will go a long way. It definitely prevents from any subrogation or lawsuits against the landlord. But ideally, 100,000. That would be ideal.
And related to that, this is a question that I was asked recently about your program, and curious, do you have a liability insurance for the tenant that is not, not related to the loss of different things, but just liability? It's kind of like a stripped down insurance policy for that tenants that they could require tenants to take out. You have anything like that?
Well, it's not an exclusive with us. We do have access to programs that do offer and do include liability on there. So if they were sued, if they had someone come over, and their dog bit someone, or someone slipped and fell in their house, in one of the units, and they filed a legal complaint, there would be coverage on most of these renters. It's pretty standard. A lot of the policies do exclude dog bites for those renters, so you really want to make sure that it's a good solid program, because if there's a dog bite, normally it's going to be the tenant or the landlord, I should say, that's really going to be the finger's going to be pointed at. So but a good question, and yes, we can absolutely help with that. We have a great personal lines division that handles that. Yeah.
Great. All right, Doris again. Doris is asking all the questions here, guys. Come on, you can ask other questions too, but she has good ones. Here we go. When insurance carriers don't want to insure fire risk areas, isn't that a form of redlining?
Doris reads a lot. I think you have your own opinions. It sounds like it's a little bit of a rhetorical question, but again, these are, at least most of the carriers are for-profit carriers, right? So what they're looking to do is they're looking to price accordingly based on their risk, and the better the risk, or the more favorable to them, the better the pricing. And there are certain carriers that will grandfather in. That's why the Department of Insurance is so strict and regulates these things so heavily. But it is absolutely happening and continuing to happen across the state. I can't tell you how many cancellations, how many carriers are sending non-renewal notices, how many massively increased rates are going up. My uncle, I don't think he'll mind me sharing this, but he lives up in where does he live? He lives near Shaver Lake. I don't know if anyone knows where that is, but up there, and they lost their home. And about 3 months prior to that, their insurance rates went up. I think it was close to 4 times whatever they were paying, and they were paying quite a bit. And so they came to us, and we advised them, and it was less than that. We got them quite a bit less than that, but and this was probably 3 months before they actually lost their home. And so they were so grateful. We placed them with a carrier that gave them more than they were expecting, handled it, and they got out, luckily. But yes, unfortunately, these rate increases due to fire brush areas and these sort of things are going to continue to happen. Areas are going to scrutinize and look at it. So it really helps to know someone, especially if you have something that are in these areas. And that goes for flood as well. That goes for a number of other lines of coverage. The better the risk, the more favorable and more price sensitive the carriers are going to be.
All right, here's another question. Do you issue coverage for a vacant property being shown on the market?
Yes. Short answer. That was the easier one. Yes, we do. It depends. If you have current coverage in place, there's some things on that policy form you want to make sure you look at, that there may be some potential coverage there for a certain period of time. But we have programs that will cover for vacant homes extending out for a number of different periods. I mean, we have a lot of clients that are sort of investors, right? So what they'll do is they'll come in and they'll purchase distressed homes or nice homes. They'll be renovating and have a pretty substantial percentage of their portfolio that's vacant. And so it's important that they have the proper coverage on those. It's really important to make sure that you look at the policy forms on those vacancies, because the wording on those, could be problematic if you're not aware of how that works. So you want to make sure that the policy you have is currently covered, and then what the period of time that the policy will allow you to have coverage for during that vacancy.
All right, here we go. How How about self-insuring if insurance wants clean risk?
Yeah, we love self-insurance. Generally speaking, you got to have some bulk there. You got to have some sizable premium amounts. I'm working on one right now, actually. That's they're paying millions in premium, right? Probably close to 3 million in premium, maybe 4. And so when you're looking at that, and that's not for everyone, right? It's when you have that much premium and you just have more numbers to play with. So if you want to have a $500,000 deductible or even higher, you can set up sort of a fund, if you will, or some sort of captive, and a significant portion of those premiums, if they aren't being used, are tax, essentially tax exempt or tax deferred, and can be used for either purchasing more property, or paying for insurances in the future. And so it can be a really, really great cost-effective way to do that. Policy forms are essentially mirroring what you currently have, but there's a lot of great techniques to essentially increase or use deductibles, especially if you're not adverse to taking some risk and you feel like your property. So if you are, I highly recommend it, because really insurance is there to cover you for a catastrophic loss. It's not to cover these really small. I mean, it depends obviously on the portfolio, but that's really what it's designed for. So if you have that mindset, I think it could really benefit a lot of our clients. And so we try to educate them as much as possible on actually doing just that, is increasing these deductibles, and leveraging essentially those risks actually being calculated, but covering for the catastrophic versus lowering those deductibles. It's a good question.
Great. Tax Pro is asking a question. Do you cover for flooding from a portable washing machine by a tenant?
Yeah, whether it's a portable one.
Sounds like a bad experience to me.
I don't know. I think a portable washer machine. I don't know if I'm familiar with a portable one. So I think that may mean that they have access to, they're moving the portable wash machine into their unit and then it floods. Yeah. So flood coverage will cover floods. Sometimes the policy form, depending on the circumstances, will cover sort of water damage. But the portable situation may throw a wrench and adjusters, depending on the circumstances of the actual event. And if it was, your washing machine, if it was theirs, I think there's a number of nuances. But yes, there is we can absolutely find coverage for any type of washing machine or any type of flood. Portable, that's an interesting one.
Oh, excuse me, I cut you off there.
Yeah, no worries.
Oh, I was going to say, like, as I've talked to you just over time, I really realized that you guys can do anything.
Yeah, we can if I mean, it just depends on the cost, right?
Right. Yeah.
There's things that, and I think that's part of educating a lot of landlords. A lot of times, last thing you want to pay for is insurance, right? But the first thing you want is to make sure that they're covered. And so when you have a claim, because that's when you need it most. But yeah, I think that there's a number of facilities. We work a lot with London. We work a lot with these non-admitted carriers that aren't domiciled in the state of California. Still really great carriers. A lot of them are standard carriers like Travelers and Nationwide, and these sort of carriers have these sort of surplus lines or non-admitted policy forms. And the reason why they do that is because they don't have to abide by the state's sort of rules and regulations. And so there's some great solutions there if we would need to cover some unique things, but usually it's at a cost.
Right. Okay.
Yeah.
Here we go. What is the most common cause of a fire in an apartment?
Great question. I am going to say, I think I did a presentation on this last year or the year before at the show, and I think if it's still to date, the most common is the stove fires.
Great.
Yeah. Yeah,
all right, Doris, hope that answers your question. Vicky Martin Smith, here we go. How do you get a risk analysis?
You can email us your declaration pages. It's a great question. Email us your declaration. That's ideal for us to be able to really look at your policy form, look at the coverages, look at what you have in place. So if you could just email us, at aoa@gsisol.com. Or you can call us directly, and one of our account executives should answer right away. If they don't answer right away, leave a message because we'll call you right back, because it's just because they're on the phone with someone else. There's quite a few of them, but it does happen from time, seldomly, but it does happen. And so we'll call you right back, but that's the best way to do it.
Right. And Anthony, I don't think you can see it, but we have your phone number underneath you.
Okay.
So all you and I see right now is just this little Zoom thing, but on what they're seeing is they're seeing the number and everything. So that's
thanks
great.
for letting me know that. That was good.
And then Tax Pro. And for fire caused by the indoor mounted lint collector from a portable dryer. Yeah, coverage on that.
We got to talk to this guy. So
yeah, you better call.
Fire. Yes. So fire. Yes. If there is a fire, regardless of how it started, we can find coverage for you. I mean, that was a bold statement I just made. So I want to caveat that. Don't hold me to that. But more than likely, as it relates to anything electrical that's on premises, like a washer or dryer, yes, we absolutely can find a solution for you. Shouldn't be a problem.
All right. Okay, Tax Pro, last question. And he was on the last live stream too, so way to hang in there. Is pricing competitive with State Farm for coverage for perils? Their customer service can be challenging.
Yes. So the biggest difference between a State Farm, a Farmers and Allstate, they're captive agents. So they work for the insurance company, right? It would be like me working directly for Nationwide, versus having a true consultant that doesn't have one sort of right of refusal or sort of is tied to that one insurance company. So that's a difference between a captive agent and an independent. We're an independent. So we are your consultants. We do a number of different things, complex, all coverages, regardless of whether or not one carrier, and sometimes it is. Sometimes we have clients that have multiple lines of coverage. State Farm, it depends. It depends on the underwriter. We've seen where they've been competitive on certain things. But the biggest difference and the biggest differentiator is being able to have someone who, the analogies I give are probably, I'll save them for over the phone, but having someone who's really specialized and who can do all lines of coverage and look at your policy forms holistically and isn't going to be bound by one carrier's sort of rules and regulations is the best solution for every apartment owner, 10 times out of 10. And sometimes, we have a relationship with State Farm. We have a relationship with Farmers. So worst case scenario, we'll reach out. I have a number of good friends that work for them. And so if it's one of those situations where, we need to work through them, it very seldomly happens. I think once in the last 3 years, I've had that. We'll do that. But, I think having someone who's an advocate, having someone who's going to be responsive, who right, who's tied to an association like the AOA, that this is all they do. Because I'll tell you, if I don't do a good job, Jeff's going to be calling me or Dan, and they do. So we really make sure that being responsive and taking care of our clients, really the AOA members is first and foremost the top priority.
Right. And, with at AOA, what we're trying to do is we really are trying to find you the best deal. So I was even for our property management software, I was looking for really good tenant insurance, and I found these lower price. I found a price that was a little lower. And he's like, well, you know what you're going to get with that? You're going to get calls from angry AOA members, because when the person goes to make the claim, they're going to be out of luck. And so that's what I like about Anthony, is that, he's going to do it right. And what you're going to get for what you're paying is definitely going to be the best. And that's not saying he's more expensive. That's just saying that what you see is what you get. So
that's exactly right. And we're not more expensive, because if you have something in place, there's no different than, you really making a change is simple. It's a simple document that is one signature, and we become your agent. And so to do that, there's no change to your price. Now, what we'll do though is, this happens a lot of times, and this just happened actually recently on an account, is we said, this is what you're covered for and this is what you're paying. Let's say it's $10,000 in premium. You aren't covered for this, this, and this. And then they come back, okay, well, tell us how much that'll cost. On the current policy, if we do that, it's going to double your premium. But you don't have to. It's the same thing. But I think having that, and this particular client did do that, and it actually went up quite a bit more than that. And they were grateful because they didn't realize that their current agent, who they had for however many years, it was improperly insured. I mean, they just were inadequately covered on a number of different levels, and that happens more times, unfortunately, than we'd like to see. But yeah.
Right. Yeah, it's kind of like your car. You just need to get it. When you get the oil change, you better let them take a look at it too. So,
yeah.
So the same thing with insurance. I think it just goes out. It just gets, prices change and the market, everything changes, and it's just good to get a look at it. Any parting words for us, Anthony?
No, thank you guys so much. Hopefully this was beneficial. We'd love to hear from you, even if it's a question, even if you're happy with your current broker. Talk to us. Let us know. We're not the McDonald's of the insurance space. We do this in a big way. We have very sophisticated buyers. We really try to differentiate ourselves in that way by service and really providing, a specialized service. And so with that, I think it's saving. So again, thank you so much, Jeff, for your time. Really appreciate you guys. You guys are just a phenomenal organization and a great team to work with. And we'd love to hear from your members. We'd love to put us to the test. That's my challenge. Put us to the test.
There you go. All right, guys. So there you are. Put them to the test. Pick up that phone, give them a call, or shoot them an email. And thank you guys for being amazing. There's a lot of political activity, a lot of things that are moving, and we need you to pay attention to those emails and get to your council members, email them, mail them. There's a whole lot going on, and we need to all act as one, rally to wherever we need to rally and get it done. Also, don't forget to subscribe. And if you like this kind of a content and the other stuff we covered earlier today, please subscribe and then hit the notification button. That way you'll get it all the time. If you're not part of the AOA email newsletter, it's free. Just sign up for that. Go to aoausa.com, and at the very bottom, you'll see a place on the right side where you can sign up, and you put in your zip code, because we're only going to send you stuff that is relevant to your area. And so when there's something that's going on up in San Jose, we send it just to San Jose, and we had you guys rally, and man, I was so proud of you. And the same thing with San Diego. We had another, there's just, as things happen, we want to keep you informed. And so anyway, thanks again. And we'll see you next time. Next week, it's Dennis Block, and then we'll have Carla Dennis after that. So one's the eviction attorney, and the other does taxes. And again, we're just going to give you more ideas that will help you make and or keep the money that you have in your pocket. Yeah, growing it. We all have the same goal. We want to leave a legacy, and we want to help you get there. And if there's any way that we can help, we really do want to do that. And we'll see you next time. Thank you.
Thanks.